Well, good morning or good afternoon. If y'all could let me know. Good afternoon, Brenda. That's right. You're on that crazy side of the country that gets up and sleeps or sleeps in, I should say, not gets up. Y'all are a bunch of slackers. You don't start till 9:30, 5 a.m. here. Well, we started market opens at 6:30, but I'm in front of the computer at 5 a.m. So hey, Andres. Well, welcome out to Trading Coaches Playbook. We are definitely going to have some fun today. Most likely. Hey, Kevin. So long as, just a warning, I did this last night too. I was teaching another class. So I didn't, as most of you know, I think that I accidentally acquired a cat a couple years ago. Was not intending in it, but she's here. Well, 2 weekends ago, a week and a half ago, I apparently acquired another one. I was out of town for the weekend, and my neighbor comes and checks on Trixie. Says, Brenda, you're asking, where's your Trixie cat? I don't know. So I'm out of town, so I leave the keys with him. He comes over, checks on her, makes sure her food's still going and her food, water and stuff. He calls me as I'm headed back home, and he goes, "Hey, you got a surprise in your house." I'm like, "Okay." He goes, "There's a little kitten in there. It was outside. I was petting it. It was the nicest thing." And I opened the door to go check, and it ran in. I'm like, "Yeah, whatever." I just figured he's pulling my leg, which I thought he was. And call me when you land. Get back. So I get to the airport. I'm going out to my car, and I call him. He goes, "Yeah, I'm serious." I go, "Yeah, whatever." He's a jokester like me, and it's like, okay. And sure enough, I get home, and Trixie, my cat that I've had for a couple of years, is kind of skittish. She's got this kind of look. She just has this weird kind of vibe about her, and I can tell when she's a little like freaked out. And all of a sudden, out of the corner of my eye, I see from the living room, to the kitchen, down the hallway, I see this little boop, and I'm like, "Holy cow!" He wasn't lying. I thought he was joking around. Sure enough, there's this little kitten in here. Things, a tiny little thing, probably 4 to 6 weeks old. I put a big old post out on the community page, asked if somebody was missing a kitten, and nobody said anything. So it's still here, and I don't think it's going to go anywhere. That's a good point, Steve. In this case, that's absolutely true. No one acquires a cat; the cat acquires you, which is exactly what happened. And now I have two of them. So I'd have a dog, but I'm too busy. I don't have enough time for a dog, and dogs need a lot more attention. Cats are a lot lower maintenance. So, and then I go away on weekends sometimes, and I don't want to take a dog. And my brother has a dog. He's always having to find a place to board it and this and that. And it's too much hassle for me. So maybe someday, but I doubt it. So if she shows up, that's the reason I brought that up. If she shows up, she gets obnoxious. She walks all over the keyboard. I'm trying to do my analysis. She's stepping on the keys, trying to type something. And if she gets annoying, I might have to put this on pause and go lock her in the room. I had to do that the other day. So hopefully I won't have to. Hopefully she'll just stay away. So not yet. I'm still on the fence about what to name her, but we'll see. So let's get started. I am not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. So just looking over here to see what is going on. I had to step out for a little bit before we started, so I had to go run an errand real quick. And I'm like, get back in time. But looking at some of the trades that I've got on, so and they're some are going the right direction, some are not at this moment. But Amber, why Amber? Off of Johnny Depp's ex-wife, that's the first thing that came to mind. So that's probably not going to be a choice for me. What was her name? Amber Heard. Huh. I don't know. That was just the first thing that hit my brain when you said Amber. Uh, anyway, so here's all the stuff that's coming up. Trading you January 31st. Oh, that's today. That's tonight. I'm doing that tonight, actually. So, then February 3rd. Inner Circle is February 3rd and February 10th. The monthly one is the 13th. Mastermind Group, February 4th and February 11th. And Fibonacci Trading Mastery is February 6th. The free online workshops. Power Hour every Monday at noon, and this one, Trading Coaches Playbook, every Friday at noon. Then Power Option Plays is Monday and Thursday. Cover Call Explorer with Trip on Thursday. And mini think tank with Brandon Monday, Wednesday, and Thursday. So that's what's coming up. And then you can find us on all the social media platforms. Yes, I'm still drinking coffee. I think that's only my third cup today. So, which I did shut the machine off before we started. I don't need any more right now. If we haven't met, these are the tools that I have: Patterns in Flash, which is all about technical analysis, learning to recognize the patterns, learning how to trade the patterns. It's, well, I'm a little biased, but it's a pretty spectacular tool. So if you want to upgrade your technical analysis game, that's definitely it. And Weekly Whispers is another one that it pairs perfectly with it, because every single week I do my analysis, which I've been doing for years. And instead of just doing my analysis and not doing anything with it, we decided to put it into a video. I mean, so I just record basically what I see. So I look at the big picture. Here's my macro analysis, which we'll talk about in a little bit. Here's my macro analysis. Here's the news that's coming up. Here's what we review last week's candidates, any adjustments we may have made. Here's the trades that we did. Here's what they're looking like. If they did, if they triggered, they didn't. And then we look at the candidates I have for this upcoming week. So I say, here's what I'm looking at. Here's the trading plans. You decide whether or not they work for you. Usually only about anywhere from 2 to 3 or 4. You typically have 20 or 30 candidates every week is about what I get once I filter through the 300 or 400 stocks. I'm looking for patterns, right? I find patterns, the cream of the crop, the best ones I like, and then put a trading plan on. Draw lines, put a trading plan, and then I just verbally will walk through my analysis and what I think. So that's usually about a half hour, 45-minute video once a week. And then middle of the week on Tuesdays, I do a midweek whispers. So basically just updating and looking at things in the middle of the week, saying, here's the trades, here's what we've looked at doing, here's what we're reviewing, or here's what, if we've adjusted plans, adjusted stops, stuff like that. So, Evie, that's a worn out name. That's real common lately. I need something different. Not like super different, like crazy different. Because I know a lot of parents the last 20 years have done that. They want to have a unique name. I was just in California last week. I took a road trip, and it blew my mind. How many people, I hope there's not any Californians here that take offense to this, but if you do, then tough to do. I couldn't believe, I literally said, I realized the license plate. So many people in California have custom license plates. And I mentioned it because my older daughter lives down there, and we're driving somewhere, and I noticed that. And literally within a minute of mentioning it, there's 4 other cars that go by that all have custom license plate. And I'm like, what? Because in Washington, I see it once in a while. And here it is, like every 10th car has a custom license plate. She goes, yeah, everybody in California wants to feel special. I'm like, well, this is the friend of the land of the fruits, flakes, and nuts, right? So anyway, we're all unique, but at the same time, we're all the same. That's what I find hilarious about it. I mean, when you really break things down to the core, we're pretty much the same, but we do have our own uniqueness about us too. So karma. Oh, Karen. Well, I'm going to use Steve's now. Steve's actual factual statement is that a cat adopted me not this last weekend, the one before. I was out of town. My neighbor came over. This kitten was out there, bolted in my house. He couldn't get it. He said he stayed for an hour trying to get it out from under the couch. It wouldn't come out, which I believe, because took her, I think it's a girl. It took 2 days before I finally got her out, but then 3 or 4 days before she came out on her own. So, oh, really? Virginia's the same? Yeah. I don't understand. I mean, I get it on one hand. On the other hand, I just don't understand it because I don't want to stand out necessarily. I'm the guy that sits in the back of the room and doesn't say anything. I like flying under the radar. I'm naturally an introvert. I know people like, well, you do this. It's like, yeah, but that's not normal for me. If you would have told me 15, 16 years ago I'd be doing this, I would have laughed at you. Would have said, there's no way in heck I'm ever going to do anything like that. I hated public. I'm terrified to get in front of a crowd. In 10th grade, the math teacher called on me one day, and I wasn't ready for it. I wasn't even thinking about it. I was totally in my own world, and I just broke out in a sweat, like because I just freaked out so bad in front of a math class of like 20 or 30 people. Of course, it didn't help that there was a very attractive young lady that sat next to me, And it was like that was part of it too. I'm like, ah, but, you're 15 and you want to impress the chicks, of course, right, guys? But let's get to the topic. Trading in, I put overvalued in quotes because that is a very subjective term, right? How many people believe this market is overvalued? I have for a while. Warren Buffett does. He's not only flat out said it, but his the trades he's done, the unloading half of his Apple position, I think half or he did about half or maybe 80% of his Bank of America. Uh, he's got the largest cash position he's ever had in history. So at least on a static number, I don't know what percentage wise because it's easy to say that, right? Just like Nvidia got hammered. It's the largest one day market cap loss in history. Well, yeah, but it's at a crazy high valuation too. And with you get inflation and those numbers get bigger, of course, history is going to be making. It's just like my brother, the goofball. I mean, I love him to death, but he's trying to, and he's got his son trying to argue the whole global warming thing or climate change. And I don't know if it is or not. Whether you believe it or not doesn't matter. My opinion is that the climate is always changing. We all go through cycles, right? But he's like, look at all the property damage that there is now. It's in the billions, and it used to be almost nothing. Well, yeah, go back 100 years to go to Florida. There was 50 houses in this whole tract of land that a hurricane just hit. Now there's 5,000. It's a direct correlation. If you build a whole bunch of houses in a spot and a hurricane comes through, the property damage is going to be a lot higher. He's like, I mean, duh. To me, that's easy. I don't understand how people can't make the correlation and see it, but some people don't. So anyway, not to get off on politics, but it's not really politics. It's just, and you know what? The beauty is we're all entitled to believe what we want. The reality is that none of us are going to be here to see it because it happens so slowly. It's not this existential threat. They've been saying that for the 70s since I was born. My dad's talked about it. He goes, yeah, they had this. And there's newspaper clippings from old stuff. So, but it's subjective. Going back to overvalued. Overvalued is subjective. You can believe in climate change. You can believe this market is overvalued. You can believe the opposite. The beauty is that on subjective things, that you have a right to believe what you want. And I think, not to get off track again, but if I think politically we're divided because people don't have respect for other people's points of view anymore, because people can't differentiate between subjective and objective. There's objective facts, there's data, which we also have in the market, right? And then there's subjective opinions. And when you separate the two out, you go, okay, you're talking about something subjective. You have a right to have that opinion. I may disagree with you. I may not like your opinion. I may think you're an idiot. I may think you're dumb, but you have a right to have that opinion. And I will respect that opinion no matter how dumb I think it might be. But if you're going to take objective facts and try to say this is, trying to say that it's not true, or trying to say that's data, that's an objective fact, and trying to argue against it and say that that's not factual when it is, like the sky is blue. That's a fact. 1 + 1 is 2. It's just, so I think that if we could just get back to a place where we differentiate and recognize subjective versus objective and respect others' subjective opinion, and then leave the objective where it is and stop trying to change what's objective. What's objective is objective. 1 + 1 is 2. It's never going to change. Anyway, um, exactly, Steve. He's looking at all the areas of the house that used to be wetlands. And I used to live years ago. We bought a house, and the house that was next door to us had been built in like 99, and ours was built in the 80s or something. And the neighbor across the street had been there for a long time, said that they brought in 95 dump truck loads of rock and dirt to fill the hole in because it used to be a swampland. And they built it up about a foot over our property. Over so every time it rained in the winter, which happens a lot in Seattle, it drizzles a lot and we get a lot of rain, they would all run off into our yard. We literally had one time I went back there and I stepped in a part of the thing and it was all the way past my ankle. It was almost halfway up my calf. It was almost a foot deep of water. And I went to HOA. I'm like, you guys need to fix this because you allowed that to happen. And they just ignored me. So whatever. But yeah, that's exactly what happens. You build a house, it comes into my yard and it's wrecking my fence and the plaything we had for the kids and all that stuff. So yeah, water wanted to be there for thousands of years. That is also a good point, Brenda. A lot of people don't want to believe the truth. People like to stay where it's comfortable and cushy and nice and, we don't rock the boat. Which, if that's where you live, I hate to say it, but trading might not be your thing because that happens a lot in the market. The boat gets rocked quite often. I mean, was anybody in a bullish trade on Nvidia last week? Because if you were, your boat got rocked hardcore. So, the one thing about the market, that's one thing I love about trading, is that it is the great equalizer. It doesn't care about your feelings. It doesn't care what language you speak, where you're from. Doesn't care about your none of it. None of that matters. None of that superficial, shallow crap that we deal with in real life. Market doesn't care. Do you have the skill, and can you execute that skill? That's all the market cares about. That's the beauty of it. And there's a gentleman. It's been 15, 20 years since I met him. I think his name was Tahir, if I remember. I think he was from Ethiopia. Really heavy accent. Didn't speak English that well. Doesn't care about the truth either. That's a good point. But he was from Ethiopia and didn't speak English well. But he was committed to learning to trade and doing it successfully, and he did. He did exceptionally well. And it was crazy the story he told. It was amazing. It was awesome. He turned like $1,000 or $2,000 into over 4 or 5 years into like $500,000, mainly just doing spreads. And all his family didn't believe him. He quit his job. He was like a luggage guy at United Airlines. He wasn't wealthy. He didn't come from wealth. He didn't have money. But he worked his butt off for a year, took what little tiny bit of money he did have and invested it into his education and then started trading it. And then his mother was sick. He ended up moving in with her to take care of her. And his family didn't believe that he made all this money. He had like 4 or 5 siblings. So he just cut them all checks for 10 grand, said, here, go cash it and see if and they all did. They're like, oh. Then he paid off his mom's house so he could live there, without paying anything. He basically was her full-time caretaker. He traded and took care of his mom. And he gave the rest of his money to his church except for 5 grand. He kept 5 grand. He goes, if I can do it with 1,000 or 2,000, I can do it again with 5. I mean, it was an amazing story. And this is a guy that had no education or very little education, didn't speak English well, and he tore it up. You probably heard it from Rob. I know he was told that story too, because he's met him and talked to him a bunch. Right? He used to follow Rob around, if I remember right. Excuse me. So getting back, you just keep throwing me off topic. That's okay. So macro view is important, but it doesn't have to impact your short-term trading, right? Most of you, I'm assuming, are short-term traders, which is an argument that a lot of people make for day trading. And that's why some people are attracted to day trading, is because you're in and out, right? You're not exposed to the overnight market. So if you're in Nvidia intraday and you get out, what was that, a 30-point drop, 25, 30-point drop overnight? No more effect. It doesn't affect you, right? You're out of the trade. You're in cash at the end of the day. That's one thing that attracts people to day trading, which is fine. If you're on the right side of a gap like that, like I was, then it's awesome, right? I don't care about it. I'm not only don't care about Nvidia, I'm ecstatic about it because I was on the bear side already, which is kind of the theme of what I'm going to talk about today, right? Is because if the market is overvalued, which I believe it is, that's my opinion, and if it sells off from here, or if a black swan shows up and the market crashes, if you get a big move, a 1 or 2 day giant move like you had in Nvidia in the overall market, where does it leave you? So it's important to formulate your macro point of view and think, okay, this is what I think the overall market is doing. Where do you think it's going long term? And some of you know that I've been bearish since 2021, which served me extremely well in 2022 when the market was in a bear market. And then in, what was it, October of 23, I think it was, when the Fed came out. So we're done raising rates. Market freaked out and went bullish. And it was about that time we had AI show up. And it got kind of mainstream. And so there was this major bullish move for the last 1.5 to 2 years. At least that's the way it looks, right? Because you've got, you got the Mag 7 that I don't remember exactly. Don't quote me on this. I think their overall market cap value before the AI thing happened was like 4 trillion or 6 trillion between all 7 of them. And now with the market going crazy up to the upside, you got Tesla and Nvidia, all these other ones, the market cap went from 4 or 6 trillion to 24 or 36 trillion. It was like a 5 or 8 fold increase in their overall market value. And when you have, um, what's the market cap weighted indexes like the SPX, it's weighted on their market cap, right? So you get 25, 35% of, you get 7 stocks that account for, what is it, 27 or 37%? I can't remember. Whatever it is, it's a huge number. It accounts for the vast majority of the movement in the SPX and the NASDAQ. I mean, a lot of it's tech stuff, right? So the NASDAQ moves big too based on those 7 stocks. And so it looks like the market is bullish when in reality, there's a lot of stocks that have been in a bearish downtrend for 1, 2, 3, even 4 years. They've been cut in half, 60, 70, 80%, and they're still beat down. So to claim that I don't believe we're in a bull market, not a long-term bull market. In fact, I think we're headed into a bear market probably pretty soon, sooner rather than later. Which takes to the second question here. What are the odds of the market going up versus down? I think this market is a little too rich. In fact, it was Patrick Bet David was listening to. And I like his podcast. He covers a lot of different topics, but he was talking about how they were prepping for this year at the end of 24, prepping for 25. And he got together with his financial advisor from Goldman Sachs. He's like, what is Goldman's view on the overall economy? And they're expecting 6% growth over the next like 5 to 10 years. That's it. He goes, that's it? 6%? That's it? Well, yeah, we've been in this heated market. It's been what, 12, 13, 14% on average the last 2 or 3 years. So the market's given outsized returns. The market, I call it, because there's a handful of stocks that have done that. The big boys in the aircraft carrier. They're doing well. Some other ones are doing well too, but there's lots of them that are, go look at Pinterest. It's been beat down. It was just on my list this week. It's been beat down. And I don't know what it is, Merch 20 or 21. Wait, there it is right there. $33. I think it got as high as 150 or something like that. It's not recovering. A lot of stocks are like that. So, but the last question is the important one is how does it affect your position if you're on the wrong side? What happens if a black swan shows up? What happens if the market tanks? What happens if NVIDIA comes for the overall market? Because I went and looked this up in my Omega charts and the trades I did in my Weekly Whispers account, 86% of my trades last year were bearish. They were short. Out of 386, I think 35 or 37 were bullish. The rest of them were bearish. Yet still had an over 100% rate of return. So even in this bull market that we've had, the vast majority of my trades were bearish. So if you're expecting or have the thought in your mind that the market might crash or it might turn bearish, because like I said there, I mean, if the market crashes, most of my trades actually, well, my bullish trade is on gold, which is basically a bearish bet on the overall market to a certain degree. But gold just broke out. Gold itself, the actual metal, just broke out of a symmetrical triangle that's been in for 2 or 3 months. And it looks like it's going to go to about 3,000. That's the target. So like if gold and NEM got beat down in last earnings, big time. So it looks like, especially if gold continues north and runs up to 3,000, NEM's most likely going to recapture at least half of what it went from. So I'm bullish on that. Every other trade I have is bearish. A couple of them are underwater. A couple of them I'm in good shape with. I've already actually captured most of my profit or all my profit. With NVIDIA, I've got everything out. The little bit that I have left sitting there to see if it goes more. I've already got a profit. Even if that goes to 0, I'm still profitable. That's one reason I scale, because then I can leave a little piece there. And if it keeps going and I get an absolute grand slam on that, then hey, cool. But like it says there, if the market crashes unexpectedly, not going to hurt my feelings. Number one, I won't be surprised by it because I'm expecting it because, well, I don't think I put the data in here. Where did I put that? I got some the other day. Where did my phone go? Oh my goodness. I was knocking my water over. That stupid new cat did that last night. I fell asleep on the couch. I laid down to relax a little bit and snooze, and I ended up waking up and there's water everywhere. What's going on? She knocked over my water cup I had sitting there, spilled all over the floor of the coffee table. I'm like, ugh. She's actually a real nuisance. I've thought about getting rid of her because she's such a pain in the butt. She's always in my face. First couple nights she came into my bedroom, she's biting my nose, biting my ears, waking me up. I'm like, ah. Anyway, um, okay, yeah. So I made some of these notes here. So credit card balances, all-time highs, right? Crossed $1 trillion about 3 to 6 months ago. As far as that, I mean, as a whole, as a nation, they've apparently kept data for the last 12 years about how much people are paying on their credit cards. And there's a record percentage of people right now only paying the minimum payments. And I think, if I remember right, there was a record number of people that are maxed out on their credit cards and they make the minimum payment every month. That's it. That doesn't bode well for the overall economy. And I was typing these down as I was hearing some of it, so I may have gotten a little bit off, but business bankruptcies are at 14%, which is a 15 or 20-year high, if I remember right. Commercial real estate, that's one I've been talking about over the last year or two. This is a year where a lot of loans are going to reset, right? Because if you build a big apartment building, you build a commercial building. I know we've had warehouses like mad going up around here where I'm at, which is Amazon country, right? We actually just about 2 miles down the road from my house. So I'm just a little ways off of this main thoroughfare. And there's warehouses galore going up and down. Amazon, well, IKEA built a big one down at the end. Amazon did, built one just about a mile or two south of me. And there's one, two, three, four just across the way from me. I could walk to in about 3 minutes. There's another one. A couple of them went right off. And there's another whole bunch of them going. It's crazy. I mean, within a couple of miles of my house, there's probably been 10 warehouses that have gone up in the last year. It's like, which seems crazy to me because what's going to happen to this space though? I mean, are they really going to be able to fill it? Is there that much of a need for that much warehouse space? I mean, I understand, we're shifting from going to the store to having our stuff delivered to us, but it just seems excessive to me. But commercial loans you don't get a 30-year commercial loan like you do for your house. They're usually in 5, 7, 10 years. A lot of times they're interest only because the people that own them are looking at cash flow. They're not looking to pay off the building because they get too many tax write-offs, right? There's a tax reason to do this. They do interest only loans. And then they have to refi in 5, 7, 10 years, however long it was. And so you've got a lot of these buildings that they were started, especially around here with all the environmental BS. It takes you 4, 5, 6, 7 years to get a stupid building built. By the time you start the process, like we're going to go to this land, you got to have all these environmental impact and studies and all this stuff. In my opinion, some of it's good, but some of it's ludicrous. Some of it's overkill. But it takes forever. So these people got these loans 3, 4, 5 years ago, and a lot of them are coming due now. They've got to be refied. And they may have gotten a loan at 2 or 3% or 4%. And now they're 6, 7, 8, 9%. So their cost to carry that note just went up dramatically, like a lot. So they only have two choices: either increase the rents or sell it. And when you don't have renters, because most commercial buildings are based on not triple nets. What's the other thing? Somebody here should know. I know this term. I'm trying to think of the term too. I'm drawing a blank. It's basically the amount of cash flow it throws off. I can't remember the acronym. I'm drawing a blank. The amount of cash flow that it throws off is basically how they value the building, how much it's worth. And right now, there's empty spaces. And so if you don't have that much cash flow, guess what? NOI, thank you. I knew somebody here would know. I was drawing a blank on it. And I don't dig that deep into it. I mean, I don't own any commercial buildings. I have a friend that does, and I picked his brain about it a little bit. So I figured that, Karen, when you put the acronym out. So, because like I say, I'm not that well versed in it, but it's, if you have half as many tenants, you have half as much cash flow. If the building's full, I know one guy years ago that I knew, I want to fill these apartments. I don't care if the rents are high or not. I just want people in there creating a little bit of cash flow because it increased the valuation because he wanted to sell it. So he's like, I'll rent to just about anybody for a decent price. I don't need to get maximum value. I just want them filled. So the valuation of commercial spaces are down, and the federal government is renting a lot of these buildings. And who knows, the new administration might terminate a lot of those leases. If they're going to work from home, why have them? And that's the other thing. You've got that whole movement where people are working from home more, not all the time, but obviously Amazon and who what somebody else went back to in office all the time. So um, yeah, it's killing the commercial space. And when you have to refi into a higher rate and your valuation is less, that becomes a problem. Residential real estate, there's lots of pockets in the country that are already dropping because the demand's just not there because the affordability is not there. So either house valuations have to come down or interest rates have to come down. One of those two, because it can't stay where it's at. It's unsustainable. So yeah, it's just one of those things that there's a lot of bubbles and a lot of storms brewing, if you will, off the shores. And so if you haven't at least bought some wood to board up your house, if the storm gets close, then you might want to. Hence the reason that we're talking about this today is because you got to have an exit. You got to have some kind of plan in case that happens. Is how many people have got caught with their pants down? Like, oh, I didn't know a crash was coming. I didn't see that. The vast majority of people do that because they're not educated on what's going on behind the scenes. They're not looking for storms. They just look out the window and go, hey, it's sunny out. Things are good. The market's at this level. My house value is the highest level ever. I'm rich. I'm feeling rich. And so people are still spending like they're rich because they feel wealthy because the stock market's at highs. The real estate's at highs. I just saw this about real estate too. The median age since in the last 5 years went from, for people that are buying houses, went from something like late 30s, early 40s up to 56. The median average right now of people of home buyers are 56 years old. Baby boomers are starting to sell their houses since they have a nice valuation, and then they're downsizing and going paying cash for another house that's smaller. Maybe they're moving location logistically. Yeah, exactly, Jennifer. Young people want to rent because, well, and especially those that are old enough to remember the '08 crash. I mean, why would you buy if there's that potential of the house to drop in value? So I'm happy. I mean, my daughter, her fiance he's astute enough to know that, I mean, they want to buy a house, but they're not 100% certain where they want to settle. Plus, he's like, these valuations are crazy. It's unaffordable at this point. And he's expecting what I'm expecting for it to come down. Either they have to drop in value, or the interest rates have to come down to make it affordable for him. So, uh, yeah, it's just insane. And that was interesting. The other part was, speaking to Jennifer's point, young people, they're I can't remember exactly what the stat was. I should have written that down too. I always think I'm going to remember this stuff and then I forget about it. That's why I have to write things down when I hear it. Otherwise, my brain just, I find a squirrel and I forget. Uh, yeah, it was something to do with young people don't even want to buy a house. And young people are not having kids because it's, light, just living is so expensive now. And that long term is terrible for real estate, for anything, for the economy overall. Because if the population is not growing, then you don't have more customers. If you have less customers, then you're making less money. So, but the larger point, and then we'll start. Yeah, exactly, Trip. Demographics spiral down, which is what's happening in China. They had their one child policy. Well, they've recently reversed that because they finally realized this is stupid. Yeah, we have over 1 billion people, but if the population is trending down, guess what happens to the business? You have economic activity that's going on constantly. And if your population is shrinking, that economic activity naturally is going to shrink with it, which means your GDP is dropping, which means your growth is dropping. The only way to really continue to grow is for the population to grow. That's one reason that you got the baby boom generation is they were investing in the market. The reason the market was so bullish from 1980 when Reagan got elected because the baby boomers started investing. My dad started investing in the market in 72 or 74, just a little bit. And then by the time 80 got there, he was making enough money that he was putting a solid amount of money into the market. The baby boom was at their, in their 30s and they're making money and they're starting to invest it. That created a big 20-year bull market because you got this huge generation that's putting their money in there, which is an argument I've been making for almost 10 years is what happens when the boomers start to retire and they start to withdraw their money from the market. Is there a generation big enough to come in and fill that gap so that when they start to withdraw, they're at least covering the withdrawals and then some? Because if you want the market to continue to increase, you can't have withdrawals, a whole bunch of withdrawals from this one big generation who's in retirement age and they have to pull their money out. And you have a new generation, if they're 80% or 20% smaller, they have to be making inputting enough into the market to cover up what's been withdrawn. Excuse me. So I mean that's a macro view perspective is like here's a storm brewing out there. And what's going to happen? I mean, my mom's a first year boomer. She just turned 78, right? She's born in 46. Those that were born in 60 up all the way up to 64, they're starting to retire. You got half the baby boom generation is retired and the other half are starting to retire. And what happens if a black swan shows up and they've got $400,000 or $500,000 in the market and they watch it drop 20, 30%? What happens if or when they panic? And they call their advisor and go, I can't afford to lose any more money. Sell, cash me out and get me into an annuity. I need to preserve what capital I have left. I can't stay at high risk in the market with a high risk of it dropping. Again, that's another storm that's brewing that very well could happen. Don't know if it's going to or not. We'll just have to wait and see. But the question is, are you prepared for it? So, and again, just to reiterate, that is the larger point that I'm trying to make today is that I would rather be on the side of the market where I think the long term is going, or I think that there's potential, there's risk potential for the downside. I don't think there's a whole lot more upside in this market. Maybe it runs another 5 or 10% over the next few months or this year. But I think right now it's overvalued. That's my opinion. And so I'd rather lean into the bearish trades and find candidates that are bearish. That way, if things do head south or some kind of crazy black swan shows up, then I'm already there. I don't have to worry about exiting a position and trying to get into a bearish position. I'm already in a bearish position. I'm already happy. Just like with NVIDIA. When it gapped, I woke up that morning, I'm like, what? What's going on? I'm looking at the news. I'm going, sweet. Because I was already there. And I saw a bunch of people on Facebook just crying, oh my gosh, I got killed. Sorry. I mean, it sucks to be you, but I've been there too. I've been on the wrong side of trades. I've had the opposite happen where I'm in a bearish trade and it gaps up. I mean, you try to avoid those, obviously, but and we're in the middle of earnings season, so you try to avoid it, but you're not going to avoid it 100%. You do what you can to avoid it, but it's going to happen sometimes. So I've been on both sides of the coin. I know what it's like to have a gap against me. So on one hand, I feel bad for those guys. On the other hand, I'm like celebrating too. I'm like, yeah. Anyway, we're not supposed to have any emotion and celebrate, get excited. Right? That's hocus pocus. There is no way to trade without emotion. So it's like saying live without emotion. It's impossible. Yeah, DeepSeek was definitely a black swan for NVIDIA. It's isolated to one stock, but it's interesting. And now at least people are aware of it and that it's out there and that it can be done. I've heard people talk about it. I won't download it. I won't use it because there's people saying it's a Chinese spy thing, kind of like TikTok, but they're just capturing information. I don't know if that's true or not. I don't have a need for it, so I don't really care. It's not one of those things I'm like clamoring to find out about. So thank you, Jennifer. That's what I shoot for. I've got some good points, she said. I'd like to believe all my points are good, but not always. Well, yeah, that's funny because it just dawned on me like literally last week because that's one thing I'm always having to think like, what am I going to teach today? What am I going to teach in this class? What am I teaching? Like, what am I going to teach in trading you? What doing it tonight? What am I going to teach in Trading Coaches Playbook? It's like, and sometimes it's hard to come up with new stuff. I mean, you go back to the same old stuff because it's standard and it's there. But I'm just looking, I go, and I think NVIDIA is the one that kind of opened my eyes to it. I'm glad that I was on the right side of that. And the question becomes, what happens if the market, because I've been saying this for a while, what happens if the market does tank? I'm happy that I was on the right side of it. But if we get a crash, which I am expecting at some point, it's just a question of when, which side do you want to be on? So why not lean into the bearish trades and maybe exit the bullish trades quicker, scale out of it faster? I mean, it's obviously all depends on what the chart looks like because there's some trades that are bullish. I mean, look at ABBV. This thing just came out. I think it had killer earnings. Yeah. And they're up 12 points this morning. That's earnings news, of course, but really? Well, yeah, that's not, I guess that's not a huge surprise. Jennifer saying don't use DeepSeek. They record all your keystrokes, including your password. So if you use DeepSeek, create a completely separate password for that than you do for anything else, which is no surprise. I mean, I can see them hacking into our systems. I mean, they've been doing it forever. I've met a couple of guys that are security guys, and they're like, yeah, I mean, every single day they have foreign entities trying to hack different places. I mean, that's why the security space is huge. Any people that know how to stop that kind of cyber threat, they're probably not going to have. They're not going to go without a job. Let's put it that way, because that's just going to get bigger and bigger. So let's see what is going on. All right, any stocks you all want to look at? We got about 15 to 20 minutes left. I'll just see what's happening right now. I already know the cues, right? Broadcom. Yeah, that got caught up in the blitz as well. Because this was looking like well, at least when you look at a pawn, LPANW. I saw pawn. When you look at Broadcom, I mean, this just crazy. And that whenever this is a weekly chart, right? So this is the entire history. Whenever I see something like that, I'll go to a semi-log scale. But that's still, if you're not familiar with that, okay, let me switch back to regular. Okay, this is parabolic, right? It looks parabolic. So the ranges here are 25 points each. When you go to semi-log, what it does is that's not what I wanted. It scales it proportionally, right? You see the first $25 is huge. So it scales it by percentage, not by static numbers. So it's a more accurate, when you're looking at a really long-term picture, it's a more accurate view of what the growth is actually like because it gives you a percentage scaling, not a static number. But that's still pretty crazy growth. I mean, there's been very little pullback. I mean, this is the COVID crash, I think, right? Yeah, that's 2020. That's the COVID crash, which wasn't even that big on a relative basis. But that's a massive bull market move. I mean, we've got 15 years of just almost straight up, a little bit sideways here, a small pause there, beautiful symmetrical triangle. But um, so yeah, it's a little crazy. But will the growth continue? It looks like it might. Is the valuation there? I don't know the fundamentals, so I can't speak to that specifically, but I would definitely question it. Depends on what kind of trader you are. If you're a longer term trader where you're buying stocks and hold them for long periods, I would definitely be looking at valuations of stocks. But like I said, I just trade short term. I got a couple longer term positions, but so we had a symmetrical triangle going there. Almost not really. It wasn't a flag or a pennant. It's too big of a range there and took too long. But with NVIDIA getting blitzed, it went right along with it. Most of the semiconductors did. Question is, where's it going from here? I know that's what you're wondering. And the answer is get a crystal ball. None of us have one. None of us will ever have one. So let's see if I have it. Well, that should be, yeah, that's today. That's just behind a little bit, about 15 minutes. So that's what it's doing. And this line is not really that solid, so you can't really trust it. It's not been confirmed yet. Of course, this big giant window will probably get filled. Your first spot of resistance is going to be. Do I have a little one? I don't. I'll just grab that. The first spot of resistance is going to be about right there, and then maybe all the way up to here, even though I wouldn't. So if it can break through those, it can break through this, then I would say it would still be bullish. Is that likely to happen? I I don't see it happening, but then again, who knows? And we still have, I think it's next week, we have lots of earnings coming out, if I remember right. There's only been, I mean, there's been quite a few big names that come out. You got Google and Amazon, I think. Didn't Google just come out? Microsoft did yesterday. Oh no, Google's not out yet. Who else came out? Apple came out, of course, last night. So we still have some of them coming, but there's a whole slew of earnings coming out next week. There's like 1 or 2, maybe 3 weeks where there's a lot. There's like 300 or 400 every day, at least Monday through Thursday. Most of it's Tuesday, Wednesday, Thursdays. So we still don't have. We've got some big name earnings out, but we still don't have the majority of them. So the next 2 or 3 weeks is kind of a wild card. That's what another reason to be in and out quickly, preferably. Does DeepSeek have a stock symbol? I don't think so. I think they're part of a private Chinese company, are they not? I know almost nothing about it other than what I've heard on some of these news reports. And like I said, I have no reason to use it, so it's not something I've dug into. But I don't think so. So yeah, Broadcom, I would see it maybe coming back up to here if it does. I think the overall market is pretty extended though too. I mean, we could have another push to the upside. The Dow's pushing the all-time highs right now. Nasdaq and SPX are right there as well. The SPX right at the all-time high essentially from a week and a half ago, 61.28. And then Nasdaq's not that far away either. So if they if they fail to break out of the highs, if those three major markets fail to break out of the highs, then I would expect this thing to turn over. I would expect the rest of them to turn over too. But who knows? The Russell has been pushing the 50 days, just barely above it right now. Okay, let's yeah, so there's and this doesn't update intraday, but it's at 23.21 right now as we speak. Okay, it's about right there. So it's right basically at the high from yesterday. But if it closes there, if it doesn't drop back below, you got the 50 day. And the 50 days flattened out and it's actually turning down, which is a bear sign. This is one reason if you follow me, if you know anything, I mean, that sounded bad. If you know anything, you bunch of idiots, you don't know anything. Oops, that slipped out. Um, if you've seen any of the stuff I talk about, I've talked a lot about the Russell. And in 21, to me, this was the big clue that said the overall market because the SPX, NASDAQ, and Dow were still running north, and the Russell was not. It was still going sideways, right here. And the Russell, if you're not familiar with it, is small caps. So it's the little companies, which make up what, 85% of the country? 85% of employees work for small companies, small business. And that's what this represents. And you see what happened in 21. And then in 22 and 23, even though the market actually started to bolt, I guess it was right about there, but it has continued to rally, but it wasn't able to break the high. The other markets have. The other three have. But what does it say about the overall economy? If the little guys are not doing well, if the vast majority of the businesses in this country are struggling, which is what this chart indicates, then that's not necessarily good. So, but didn't we look at the SPX? Okay, a couple of years for spiders cues, which are going to be the same as the overall market. I mean, they're pushing the all-time highs. I guess technically we're a little bit higher than that, but I mean, it's what it's going to do from here. Who knows? I mean, if it breaks out of that level, what's the next spot? I mean, I would take whatever this range is right here. Did that show up? Yeah, I did. Okay. Because it's very common for stocks to move in ranges. I mean, the ranges will be the same. When you go draw support lines, and if we take out, treat this as an anomaly, then that's not, that is today. Oh, yeah, that's the spiders. Okay. Was what a head and shoulders? It wasn't a head and shoulders, yeah, but it just negated it last week. Yeah. So there was a small head and shoulders. It's not very big. I don't like the small ones like this very much. I don't put a lot of, I'm kind of like, eh. Usually you want to see, I mean, this is only a couple weeks. Usually you're going to see a month or two for each of them to form for the big ones that are like direction changing. That's really small, and it basically negated itself within a couple of days. It broke down, but then it broke back up. So, and part of this is news related. You got this big rally from news. But as far as creating a measured move for the next move up, if it does, if it breaks out of there, if you take these ranges, like you say, when you draw lines, you'll go see. When you go look at the ranges that stocks drive, that they go in, it's very common that they're symmetrical. I mean, they're the same distance, equidistant, symmetrical, same thing. So I'd say the target, if we break out, it's about 628. If's the big question. I've been seeing quite a bit of bearish sentiment lately. I mean, just on watching the intraday charts and seeing things how they're moving and this and that. So I'm still bearish, but I've been bearish for 2 years, 3 years, and it still keeps going higher. All right. Hence the reason 86% of my trades last year were bearish. But that's the crazy thing is I can have a macro view of bearish and take the majority of my trades being bearish and still be profitable. That's the reason for trading short term is getting in, getting out. And there's lots of stocks that are in a bear mode, even though some are not. So there you go, Brandon. Coffee's gone. No more coffee. Not for a couple hours. Excuse me. Yeah, tech earnings coming in a couple weeks. So Q's is going to be the same as the NASDAQ. So not much here. That line could be gone. I mean, it's similar. Oh, there it just showed. There's today's candle. If it breaks out of there. I mean, same thing. It's probably the same. It's about 25, 30 points upside if it does. Amazon is in, well, it has this little bullish wedge. I guess that's probably most likely what I'd call it. It's not really a flag. It's not really a pennant. It's kind of, I mean, the closest technical pattern that you would call it would be a wedge. And it broke out. Of course, there's the big gap down. Let me zoom way in here. So this is kind of combining, even though it's not a textbook flag or a pennant pattern, it's not really even a textbook wedge. It kind of it's closer to that than anything, like I said. So I have the trading plan on there, but it's essentially been negated right now. It was looking good here, and then of course the news of NVIDIA comes out and it gaps down, but it recovered. I mean, it's not moving anything super fast, so it's not something I'm excited about, and it's already outside of my entry point anyway. So I'm just going to watch this, and if it takes off and I miss it, so be it. Earnings is coming out there in a week or two. That's what the vertical line is. That's one way I do this. If I have something I'm looking at or a trade that I'm looking at, I'll go in and see what the earnings date is, because sometimes these earnings, the little earnings triangles, diamonds on Omega charts is accurate. Sometimes it's not. And the question is it before the market or after the market? So if it's after the market, then I want out the day before. So you got to account for that. I just put vertical lines out there to so I know how close we are to earnings, so I can visually see it. I don't have to guess. Years ago I used to put a texting on there about when earnings are, and I'm like, it's too much work. It takes too much time to do all that stuff. So I just put a vertical line. That's my earnings, and that's my earnings. Hold on. Oops. Oh, it came up right anyway. I typed it in wrong, but it came up right. Palo Alto Networks. Is this a semi or is this hardware? I don't remember. I mean, I know the company name, but I don't know what they do exactly. They do networks. They probably survive on Google, do they not? Well, a little range there that obviously failed. There's not. Trying to find. There's a major resistance right there. All-time high. That's a little longer term than it looks like. Put it here and see what it looks like. Yeah, that's a valid line for sure. Next major support looks to be about right there. That is a because I also have these over here. I have the solid lines are major support and resistance. I have this large dashed, which is a moderate support and resistance. I also have a small one. So that way, when I go back, so when I'm mentally sitting here looking at this, analyzing it, if I go back and I come back to this and look at it later, it will help me recall what I was thinking when I drew that line. Right. This is not a major support resistance. It's pretty solid. I mean, there's quite a few little hits on it here, right? This one, there's less hits on, so it's not quite as solid. So it's just a visual way for me to go, okay, that's a minor support. That's a moderate support. This is a major support or resistance, vice versa. So, in fact, I even put one right about there, a minor support resistance level, which it was here. It got stuck in this little range here and it broke below it, came down, found the trend, popped back up. It didn't hesitate. Well, it hesitated a little bit at this line here, but then it popped back up and hit that, then it fell back. So at this point, at least right now, well, that big bearish engulfing pattern certainly makes it look more bearish once you get into candles. I don't know if there's anything here that's compelling. There's the 50-day, which has turned south. Right. And some of the big hedge funds and the big managers, if the moving average is moving north, they'll stay bullish. If it turns south, they'll start to unload their position. So the 50-day moving average is moving south right now. Obviously, that can change. But that definitely adds a bearish leaning to it. It adds a bearish just argument to the case, whatever you want to call it. And it found the 200. So I wouldn't be surprised to see this come down to the 200, which would also coincide with this, you know, moderate support. So I can see a potential trade from there to there. So this is what I would do. I go, okay, there's the stop. I'm gonna put the stop slightly above the resistance, slightly above the last 2 days candles. And then I always put the stop in there first and then put the 3-to-1 target. Actually, that's probably a little low. Now, in no way saying you should trade this or suggesting you trade it. This is just the way I would do it if I was looking at it. So I've got to stop above the recent highs. That way I have my back, which is basically $4. So that kind of orange or that puke color line is 1-to-1, which if I only get a 1-to-1, return on my investment, I kind of puke. So that's why I picked that color. And it was one that stands out. Some of the colors don't stand. I tried to find colors that stood out, but the light green there is my 3-to-1 risk reward ratio. The blue is 2-to-1 and the dark green is 4-to-1. So usually I'm shooting for the 3-to-1. So my entry point would be there 185.80. My stop's at 189.70, 189.79. And the target's here. And if it gets down to the 1-to-1 and it starts to slow down, I might peel some out. If it gets to the 2-to-1, I might peel some more out. Just depends on what it looks like. If this thing took off and blitzed through here today and it was really strong and lots of volume and there's tons of sellers showing up, then I might leave the whole thing there. Or maybe I'll only take 10 or 20% out. So it's all based on what it's doing in the moment. Like, is it super strong, moving the direction you're wanting it to? If it is, then I'll leave more at risk. It's all about risk assessment and, where's your comfort level at? Are you good with how much risk you're taking? That's the ultimate question. Oh, head and shoulders. No, head and shoulders is a reversal. If it's, well, again, it's always if it's a good one. It doesn't have to be a beautiful one. I've seen some really ugly ones that play out perfectly. So, and even small ones like that. Yeah. So Netflix, I haven't even seen that. I haven't looked at that for a while. Oh, you thought I was gonna not today. Talking about filling this gap. Well, that's the thing with gaps. I mean, you can have the support range could be anywhere in between the gap. It could find support right here. It could fill it and find support right there. Could crash right through it. Right? We don't have a crystal ball. So that's the tricky part to trading is we're all looking for this. What's it going to do next? None of us know. That's why you have to manage your risk. You have to manage your mindset because you don't know what's going to do next. So, but I see that all the time. What do you think is going to happen? Oh, I'm buying. It's going to do this. It's going to go up. It's going to do this. It's like anybody that makes a definitive statement like that, they haven't traded very long. Because you should know as a trader that you don't know what's coming next. And the sooner you get that through, it took me a long time to figure that out. Because when I first started, it was like if I could just get good enough at reading the charts to know which way it's going to go next, know what's going to happen next, I'll make a fortune. Took me a long time for it to sink in that I don't know. I don't care how good you get at reading charts. You don't know what's going to happen. It's always the flip of a coin. So while reading charts and analyzing is important, it's a critical piece. You got to figure out how to do it. But don't get stuck in the trap that you're going to be able to figure out what's going to happen next. I can't stand to see these goofballs advertising on Facebook saying, well, what if you could figure out? I just saw this recently. Well, what if you knew what was going to happen tomorrow? Well, we figured out a way to know what's going to happen tomorrow. And I just want to punch these people. As bad as that might sound, it's so irritating because they make a bad name for everybody in the coaching industry because you're coming out telling these people that you have a way to know what's going to happen tomorrow. And nobody does. One, one person does. And he's not, well, he's here, but he's not here. You know what I mean? Only God knows what's going to happen tomorrow. I don't, nobody else on the planet does. Nobody. Even CEOs. They might have a 99.9% certainty of what's going to happen if they come out and are getting slaughtered with earnings. Oh, I know, Brenda. That's why I said he's here, but he's not. Uh, they might know if they're coming out saying, our earnings are horrible, we missed by a ton, and next quarter's going to be awful. They know with almost 100% certainty that the stock's going to go down, right? But you don't know how the market might react. Just like Facebook came out, was a couple years ago. They missed their earnings, and they said the next quarter is probably not going to be very good. But they also announced they were cutting 20% of their staff or something like that. Market went crazy. The stock bolted north. And a bunch of people are scratching their head going, this doesn't make sense. They missed their earnings. They said next quarter is going to be terrible. And yet the stock's raging north. It doesn't make any sense. Sure it does, because they just cut out almost every business. The most expensive thing is labor. That's their number one expense. And what they just said is we're going to cut out a massive chunk of our labor and boost our earnings by cutting back on our staff. Market loved that because it's a smart CEO, which I'm not sure if Zuckerberg's smart or not, but I mean, he seems like it. He's obviously smart enough to do what he's done. But when you make a decision like that, that says, we know that business is getting weak. Last quarter proved it. Next quarter is going to prove it, but we're going to adapt. That was the thing. The market likes when the corporate execs make decisions that boost the bottom line. If it makes the future look better by making them more profitable, that's all the street cares about is what are your earnings? How much are you earning? And what does your future earnings look like? Yeah, it's going to get weak for a quarter or two, but in a year or two, we're going to be much stronger. And they are. So there's GLD. GLD's, I mean, it's right. It's the gold ETF, which gold, I believe, is going to go to about 3,000 an ounce. That's the target, at least, or just shy of it, which means this will most likely go too. This is another thing, too. If you're bearish, I mean, like my long term view is bearish. I think the market is going to struggle. I think inflation is here to stay. I think there is a potential for gold to go really, really high. And just saw something yesterday. I've seen it before. Central banks have been buying up gold for a year or two at least. Central banks from other countries have been buying up gold. Why? What do they know that we don't know? Sometimes it's just the little clues like that that you just got to pay attention to and go, oh, why are they doing that? And just ask the simple question, why? It's not hard. And you go, why would they be? Because they either know something or they think something might happen and they want to be hedged and be protected themselves. So, I'm to think about. I mean, there's a bunch of questions. Let me catch up because I'm over. Holy cow, I'm 5 minutes over. I thought it was 2 minutes over. This post-nasal drip is just killing me. I thought I had it licked a while back, but what tool is that you just use with the stop? Oh, to draw the thing. I assume that's what you mean. Let me see if I can. I don't know. Give me a stop. I got to find something that I don't have drawings on. What's this? GLMD. I don't even know what it is. Some pharmaceutical. I think that's what you meant, Tom, right? How did I draw that? Oh, that was a terrible one. One. You saying I'm number one? I mean, I wouldn't disagree, but I know. Robbie's a lot of people use that as a way to say yes, yes is one and two is no. Oh, alcohol. There you go. This is one of my favorites. So that is on Omega charts. It's the advanced risk reward. This one, if you go up to, let's see, it's under drawing, I think, right? Yeah. Under drawing, where did it go? Because I picked the ones I like and just have them on the right side there so I can grab them real quick and easy. There's the risk reward, and then there's the advanced risk reward, this one. I just discovered this like a year and a half ago. And it's spectacular because I used to, well, let me show you first how I used to do it. I used to go here and I'll go, there's my stop. And then I have number two, number three, number four. And I say, okay, there's my target. And then I'd have to put this in the risk reward calculator, right? And then I'd go, okay, and I have to plot this and I have to adjust it and change the number. And it's like, ugh. And then I discovered this, right? So there's all three of those. Then I discovered the advanced risk reward where I can just drag it on here and I drop it. And I usually look for the stop first. I put the stop where I want it, right there, visually above the highs right there. And then I can grab this one with the double arrows and adjust it. And I can automatically have, well, there's that, the the light green is the 3-to-1 risk reward ratio. I used to just have that on there. And then I realized I could put the other one. So this is 1-to-1, this is 2-to-1, this is 4-to-1. So now I can have all of those on there, not just my 3-to-1, but I can have 1-to-1, 2-to-1, and a 4-to-1 in case it goes further. Um, One thing I love about those, because I used to have to calculate this number, right? I have to do the math between 38.15 and 36.49 for the stop to the entry. Like, how much risk do I have? Well, the 1-to-1 is the same thing. So this is a buck 66. I don't have to even calculate that number anymore. I just see it right there. So I know I got a buck 66 risk, $5 of 3-to-1 risk reward. So yeah, you just grab it. And you can go the other way too. It'll take a little getting used to. If you're going bullish, you got to drag it down. But the first thing I do is I'll drag it, I'll move it around, I'll get my stop where I want it first, because it's the first thing I put. Okay, if I'm going bullish, I'll put it below that low, the low of this candle right here. And then I'll grab the entry and adjust that according to where I want the target to be. So I'll move it up to, let's say maybe I think that all-time high there is a little aggressive, so I'll make that a 4-to-1 and then maybe leave the 3-to-1 here. So go get the tool and just play with it. That's the best thing you can do. That's what I had to do. And when you click on it, it'll probably be different by default for yours. But you click on it, you can adjust these. You have to adjust these ratios, and there's a whole bunch of stuff in here to play. I went and played with all of this stuff. Best thing you can do is just go play with it and do it. You can put the prices, profit loss labels, click it, and see what it does. Right? You can move the labels to the right if you want them on the right side. Just do that, click them, and see what it does. And then when you get the way you like it, hit save as default. And then it pops up like that every single time. Right here, advanced risk reward. You can see right at the top of that dialog box right there, advanced risk reward. That saves me probably a half hour a week as far as, because I used to draw my lines the other way. And then I had to punch it into the risk reward calculator. I don't have to do that anymore. It's beautiful. I love it. It's the best thing I found on here ever. Because yeah, it's at least a half hour a week it saves me. But yeah, just play with them. And then, like I said, when you get it the way you want, hit save as default. You might have to fiddle with some of this. You can put the labels on there, stops and entries. I couldn't figure out how. Well, I guess I can do that. Does that show up there though? Oh yeah, it does show up right there. I guess you know what? I didn't know that was there even. Oh, come on. No, I don't want to save it. Oh, it stayed there. I didn't say save it. Oh, let's delete it. Whoops. Sorry, Elise. I'm getting a little tied up in this real quick. Sorry. There we go. Do 1 to 1, 2 to 1. I didn't even know I could put those on there. See, you learn something new every day. Stumble on it accidentally. Save as default. There we go. Oh, it's on the left side, but that's okay. I mean, I don't need it personally myself, but from a coaching perspective, it's nice to have. So you can see my risk reward ratios: 1 to 1, 2 to 1, 3 to 1, 4 to 1. It makes it because I mean I already know what colors mean the colors are, so I don't have to worry about that. But um, yeah, that makes it more obvious. So where did it grab the ARR box? What's the ARR box? I'm not sure what that is. Oh, advanced risk reward. Duh. If you go up to drawing, it's right about halfway through. I know. I was like, okay, that was dumb. But if you go to where to go, where to go? Is it not in here? I don't remember where it's at in here. See, y'all should be getting the training program because I go through that all here. But you can set up, I mean, you see all the ones here. By default, they're probably there. A lot of times they're up here and they're over here. I just created the ones that I use, and that's it. Put them all the drawing tools are right here because I want to click and be able to draw right there. Come up because I'm an efficiency freak. I don't want to put them up here. I don't want to go all the way over here, click, and have to come down here. I want the drawing tools right here so I can click and draw because I'm working on the right side of the chart. I don't care about back here. You're welcome. So yeah, I just like I said, I'm an efficiency freak, so I only have what I use on here, the drawing stuff there, and then anything else I have up here that I don't use very often anyway. But yeah, if you're not aware of it, I got a whole training tool on this tool and how to use it. It's like 4 to 6 hours of video about how to set all this stuff up and how to do it and how to create and how to use your Omega charts in an efficient, fast manner. So if you want to get to where I'm at, where you're just flipping through stuff quickly, and that's what it's all about. It's time is money. So I spend an hour and a half, maybe 2 hours now total doing my research in a week. I used to spend 3 to 4. I've gotten to a point where I've even done it in an hour before. I flip through 300 to 400 charts, boom, filter them down, draw the analysis, boom, I'm done in an hour. Some each hour and a half to 2 is typical. So anyway, all right. You think gold is better than Bitcoin? That's crazy, Jennifer. I mean, don't you know that Bitcoin you can build a house on and you can make furniture, a jewelry, and it conducts electricity and it has real world uses? Bitcoin is an absolutely amazing thing. It does absolutely nothing but is a digital asset. It does nothing. It has no real world use. So yeah, I'm with you on that. Thanks, Brenda. Yeah, no, and that's the argument I make against Bitcoin. God forbid the world comes to a crashing end, you can still use gold. It has a real world purpose. Yeah, I was joking. I was being sarcastic because that's the way I am. That's the way we were just talking about that. Okay, I was born April 1st, feet first, and I was supposed to be a girl. That explains it all, doesn't it? Right? Like, oh, he's got an Audi. We thought he was coming out with an innie. Nope, I was Amy Ann until I came out. And then they were like, oh, we better figure out a new name. Now our little sister, who came along almost 9 years later accidentally. I mean, she's the margarita baby. She's Amy Ann. So, but yeah, see, now you all know. Brenda explains it all, doesn't it? Good thing you hung out. You just found out my secrets. So anyway, I'm a backwards fool. All right, I gotta shut up. Unless she's gonna go crazy on me. I'm gonna get yelled at. So anyway, hopefully it's fun. All right. Well, thanks for hanging out and having a good time at least. So it's always fun coming in when people are chatty. So We will see you again. So y'all have a great weekend and we'll see you soon. God bless. Bye bye.